We need your support. Click the like buttons below. Now onto the video. Welcome to Read the Ticker Black Screen TV. News item to consider. We're going to look at the Eurodollar index. Now the Eurodollar resembles the price of US dollars held outside the United States. Now why US dollars are held outside the United States is because the US dollar is the reserve currency and you need to have a liquid supply of US dollars to trade. Otherwise you can't buy, power, oil, food for your country. So if the US dollars can't be purchased, the price goes up. Alright? So the rising price in US dollars outside the United States is a risk off. It's risk off moment. So here we have the Eurodollar rising, okay, and we had the Eurodollar rising back here, and the Eurodollar rising back here. That basically means people are hoarding US dollars, and if you want to acquire US dollars outside the United States, they're expensive to acquire. So the Eurodollar index measures the shortage of US dollars outside the United States. Now I'm just going to highlight a double band here. I'm going to put another bar in there, which is quite interesting. We're going to look at now. So this is a risk off, risk off, risk off. And when it flattens out and rolls down, that's pretty much risk on. So the rest of the world can get US dollars. They're plentiful and they have no trouble paying their bills. Only when things start going wrong in the banking system, and obviously as we know now, the Federal Reserve is already actioning a repo to the primary dealers, which helps out liquidity there. That's the beginning of QE, because QE is obviously government printing. The Fed's balance sheet is expanding, but it's only to the primary dealers at this stage, but it's definitely QE. So we scroll down here, we'll see that the stock market here, the S&P 500 is falling, S&P 500 is falling, and it's going sideways. So what I want to note is you see how this part here is going sideways at the moment, and in 2007-8 the market went sideways for a bit while the Eurodollar rose. Now if you look up here, the Eurodollar rose a little bit. So at the moment it's very similar to the top of 2008, as Eurodollar is anticipating more risk off, and they're anticipating dollars are going to be hard to acquire outside the United States, and therefore the price is going up because they are nervous about paying the bills and buying oil or food or whatever they need for their country. So who are the analysts behind the Eurodollar? Well, these are your bankers, these are your central banks, these are the smartest institutions on the planet. They're saying to the stock market, the equity index can't be trusted. See how it's going sideways, even made a new high, just coming down here. So everyone's sort of saying, well, let's buy the dip. Made a new high, oh, let's buy the dip. It wasn't so good. So at the moment, the Eurodollar is calling the bluff on the S&P 500. Now, things can change, obviously, if there is some sort of stimulus coming out of the Federal Reserve in the way of lowering interest rates and QE to get the US dollar down. Obviously that's a major requirement from Mr. Trump, and he wants the US dollar down to get some sort of stimulus going into the economy and keeping the market up. And it's because if it doesn't happen and the US dollar rises, it could actually cause a crisis or confirm a crisis. So the Eurodollar, some of the smartest analysts in the world, and the smartest institutions are calling the bluff on the stock market rally as it makes new high in the last couple of weeks. This is weekly, so we've got the last 2 weeks has made a new high. They're saying risk off, with the S&P 500 is still saying risk on. And if you also look at the short-term interest rates, the blue line is the 90-day bank bill. That is, 13 week they call it. That is still falling, which is anticipating a lower Fed fund rate. The Fed fund rate, which is the red line, has fallen twice. The consensus is when a Fed fund rate falls 3 times, that's 3 rate cuts, we're pretty much in a crisis. So now we're on the what are we at? The 8th of October. That's down under time. That's New Zealand time. So I would suggest we've got probably about another 4 weeks to find out whether things are going to get rather interesting. And I would suggest that we'll have to watch for Fed speeches and Trump tweets to see whether he gets some stimulus to get this market moving higher and taking the risk off attitude to risk on. So, short story, smartest banks in the world are saying it's risk off, repos started, but the equity market has got it wrong. Stay frosty. Thanks very much.